All right, guys, this is Luis Moreno with 360 Insurance Group. I have Brandon Reed here from Heartland National. Are you Vice President, President, CEO? What's your title now, man?
VP of Sales, yes, sir.
VP, the youngest VP in history, probably. man, I'm not even VP of my own company. I don't know what I am. Nice. How nice. Guys, we have a concept here that we're going to share with you. Okay, it's a pretty neat little concept, and it's a T-chart. Okay, not timeout, but a T-chart. And I've used it with my clients. Other agents have used it, and so we're going to demo the T-chart to you. And in this demo, it's going to be a comparison between a MedSup and a Medicare Advantage paired with a hospital indemnity plan. So stay tuned, guys. But before we do that, make sure you subscribe to this channel. I need a little love. Like this video. Post some questions down there. If you don't have an appointment with Heartland National, this is the go-to hospital indemnity plan that you must have, and you must be adding to every Medicare Advantage sale that you're doing with these seniors. Not only because it gives you extra money, but because we need to take care of our seniors. There's some exposures out there in these Medicare Advantage plans, and we can help cover some of those exposures with a small premium. So let's look at this T-chart. And again, make sure you subscribe to this channel. Brandon, let's show them what we got.
Let's get this party started, Luis.
All right, so there is a T-chart, guys. As you're looking at this, on your left side of the screen, you will see Medicare supplement with a prescription drug plan. On the right side of the screen is an MA or a Medicare Advantage with a built-in prescription drug plan. So it's an MAPD. So we made some assumptions in here. I'm going to let you, Brandon, talk about the assumptions that we made. We're going to look at the savings that somebody's going to have, what we can do with those savings, and the pros and cons of each of these two different options that seniors have.
Beautiful. And the first assumption we make when we go through this T-chart, everybody, is assuming this individual is paying the standard Part B premium. Some folks will be paying less. Some folks will be paying more for their Part B. As we know by now, a lot of people are getting subsidies from the state that can help pay a portion or possibly even all of that Part B premium for our clients. Those are our Medicare Savings Program eligible beneficiaries. But we also have some folks who make more than roughly $90,000 a year, and those individuals could be paying more than their $170.10 each month for their Part B. Now, this Part B premium isn't something that goes away just because we're looking at a $0 premium Medicare Advantage plan. This is still in the mix. Okay, this is in our left-hand column and our right-hand column in both comparisons. We've also used an example here, just one of my clients that I've helped in the past, who was paying $170.35 for a Medicare supplement. We've gone ahead and totaled that with their Part B deductible on an annual basis, bringing his total annual premium to $2,277.20, just for his Plan G and Part B deductible included. Now, why do I include the Part B deductible in this number? Because it only takes 1 or 2 doctor's visits to hit that number every year. Most of our clients will reach their Part B deductible before the end of the year.
Or just a visit to the ER or hospital when you've met that.
Yeah, anything on the Part B side, outpatient or medical.
Oh, that's right. That's right. Part A is a hospitalization. Very true.
But anything outpatient will take us there. And then on the prescription drug side, looking at this, I believe it was a Humana Walmart plan is what we were looking at. This was the most cost efficient, the most affordable prescription drug plan for this member. But he still had annually $518 in copays and coinsurances on the drug side. So paying out of pocket at a higher rate than he would be on a Medicare Advantage plan. We total all this up and we can see an annual premium and of course drug costs and Part B deductible included of $5,189.20. Okay, Then we move over to the right-hand side of the screen where we still have our Part B premium. However, we've now helped this individual. In this case, it was an AARP Plan 2 PPO for a $0 premium each month, no deductible on most Medicare Advantage plans on the medical side or hospital side, and no costs out of pocket as far as premiums go. So there, we're already saving $2,277.20 per year. What we were then able to do was help bring Pat down to a $0 copay on his drug plan, right? Because these Medicare Advantage plans include drug coverage, and oftentimes more comprehensive, or we could consider it better drug coverage, more affordable drug coverage. And on this plan, using Optum Rx mail order pharmacy with AARP, look what we were able to do. We brought his drug costs down to $0 a year. Tier 1 and 2 drugs in the mail order, I'm telling you, guys and gals, no copay on those Tier 1 and 2 drugs using a preferred mail order pharmacy. Whether it's WellCare using CVS Caremark, right? Aetna, United Healthcare, Humana using CenterWell Pharmacy, and like we said, United Healthcare in this case, Optum Rx mail order pharmacy. Able to bring the drug cost down to 0 too.
I want to make a comment here about the MAPD prescription side of the house. It's usually a lot richer. Like you said, that's why you were able to eliminate that $518. But guys, a lot of times with some of these carriers, the Tier 1, Tier 2 drugs are covered in the donut hole. I have yet to see that on a PDP. On a PDP, once they hit the donut hole, they're going to have to pay their 25%. But on some MAPDs, when they're in the donut hole, they'll still have Tier 1, Tier 2 copays while they're in that stage. So that also it's a big plus on the MA side. Makes
a big difference. And Luis, I know you love this next part so much, so I'm going to give you the option to start talking about some of the pros of the MedSup if you'd like.
I will.
So I can take on the Medicare Advantage.
Yeah. So here's what we've got. So if this is your insured, they're paying $5,100, almost $5,200 with an MA, with a supplement and a PDP, $2,000 for the MA. That's a savings of $3,148 a year. Guys, for some of these seniors, this is huge. Okay. Now, here's the other plus for the right-hand side of this T-chart, the MA. Look at the positives. A lot of these seniors on TV they're constantly being hit on TV with all these extra benefits that they're entitled to. Well, if they have a Medicare supplement, they don't have all these extra benefits. We're talking about dental, vision, hearing. Now, we didn't even factor this in, Brandon, but what if they have a Medicare supplement and they have a dental plan? That's another premium that they could be paying on a Medicare supplement that they won't have to pay on the Medicare Advantage side.
Another $400 or $500 a year.
At least, yes. And then also on the vision side. So vision is about $16 a month. So that's almost another $200 that if they could potentially be paying on the Medicare supplement side that they don't have to pay on the Medicare Advantage side.
And if they're not paying a premium for that, what are they doing? They're paying out of pocket for their dental cleanings. They're paying out of pocket for those crowns or those teeth they had to get removed. It's a lot. Yeah.
And that's not cheap. Some of these seniors like to go work out. They could be paying a gym membership. Okay, well, if they're on an MA plan, they're going to get a gym membership covered. So that's another savings. So guys, we do have a lot of potential savings with the MA because they're going to be getting a ton of extra benefits on the Medicare Advantage side. Now, those are all the pros that I talked about. Low or no premiums. Okay. When you enroll in these plans, there's no underwriting. Okay. We're about to enter annual enrollment, guys, which means you don't have to answer any underwriting questions. It's just a matter of moving them to a better plan. And you as agents checking the doctors and the formulary to make sure that they are not going to lose any docs or specialists or have to switch medications. There is a limit on their out-of-pocket costs, but we're going to talk about that here in a minute. It's got built-in drug coverage and, of course, all the extra benefits. Okay. Those are the pros for the Medicare Advantage. I love Medicare Advantage. Here are the negatives. Okay. These are some things you're going to have to deal with, but they're not really negatives is if we do a good job. The network. Okay. There's network limitations. Now you mentioned that this was a PPO. So there's in-network benefits and there's also out-of-network benefits. But if you write an HMO, you're going to have only in-network benefits unless it's an emergency. Okay. You're going to need some referrals if you're in an HMO. Again, not a big deal. The doctor usually handles that. That's why you agents are doing your job to make sure the specialists are in network. You're going to have co-pays and co-insurances. We're going to find well, Brandon's going to talk to you about how to take care of some of these co-insurances and co-pays that these insureds are going to be on the hook for. And there is prior authorizations. Plans are not standardized, which means every carrier, pretty much the plans look the same, but there are some differences. Now on the MedSups are not bad. Okay, they're great. Number one, there's no network. You go to any doctor, any facility, any provider that accepts Medicare. Okay, the benefits, these are standardized. Okay, a G is a G is a G. It doesn't matter what carrier you're with. They are exactly the same. There's no surprises. That's huge. You know that all you have to worry about is your Part B deductible, and that's it. Okay, after that Part B deductible, you're covered at 100%. No referrals, no prior authorizations. It's huge. Now, the negative side to this Medicare supplement side is premiums are going to increase. These are things you're going to have to deal with. There's two types of increases that MedSup carriers hit their insureds with. One of them is an age-banded increase. As they get older, the rates are going to go up. The other is based on claim history for the company. They could come across the board, and we're going to raise rates for everybody. So those are two negatives on the MedSup. And you quoted a 170. Brandon, I've seen them as high as 300 and something a month. And it's tough. Guys, these insureds are going to have to pay their premiums. Otherwise, they're going to lose their plans. Okay, so they're always going to be paying a premium.
And the reason I throw that in there as a con is because, this person might be the healthiest person on the planet, maybe taking 2 visits a year to see their PCP, but they're still paying that $5,000 in premium and drug copays every year. It's not like Medicare Advantage where you just pay as you go. On this standardized Medicare supplement plan, you've got the cleanliness of not having to pay any bills, but you also have the fact that you probably could have saved, $2,277 that year by being on a $0 plan and taking those 2 PCP visits at a $0 copay.
Yep, completely agree. So it's the MA side, the right-hand side of this T-chart, it's a pay-as-you-go system. On the MedSup, you're also going to have to buy a prescription plan. So there's another premium you're going to have to deal with there. Dental, vision, and hearing, that's another premium you're going to have to deal with. And then there is underwriting. There is no annual enrollment for Medicare supplement. So there is a time of the year or a time in this insured's life when they turn 65 that they're going to have guaranteed issue, no health questions. Or if they have they have credible coverage, they're working for an employer after they're 65. Well, when they leave that employer and leave that credible coverage that they had with the employer, they will have a guaranteed issue window to get into a MedSup. Beyond that GI window, it is full underwriting, which means they're going to have to answer the health questions. They answer a yes to a health question, they're automatically declined. So it's kind of one of these things. If you want a MedSup, you better get it when you have that guaranteed issue window. So those are the big features on the MedSup and also on the Medicare Advantage side. Now, what Brandon's going to discuss with you here, guys, is how can you make that Medicare Advantage look? It is not. It is more of a look like a Medicare supplement. So Brandon, take over.
Nice. Thanks, Luis. And well said. 2 very good options, right? When we educate our clients, whether it's turning 65 or they're retiring onto Medicare, our number one goal is to give them all their options. Okay, and we've done a good job of that by going over the differences between a supplement and a Medicare Advantage plan. We're not trying to make one look bad over the other. We're just letting them know, hey, can you afford this $5,100 that we mentioned here on option one, your Medicare supplement with a standalone drug plan, and paying for your dental, vision, and hearing out of pocket, or picking up some additional coverage for that? Or are you more of an option two person, right? Medicare Advantage, pay as you go, but also we have the ability to protect these clients from some of the bigger exposures related to these Medicare Advantage plans. It doesn't just have to be really comprehensive versus all these holes in these $0 premium plans or low to no premium plans. We've got a middle ground here, and that's what I'm so excited to share with everybody today, is we've got the ability to now present them with the ability to not have to pay some of these copays on their Part C Medicare Advantage plan. Mr. or Mrs. Jones, do you want to have to pay that $295 copay days 1 through 6 in the hospital? No? Okay, well, just don't let me forget. I'll show you a way we can eliminate an exposure like that for a fraction of what you would be paying for a Medicare supplement. And again, I'm not putting you on a Medicare supplement. You told me that was unaffordable for you. What I'm going to try to do here is I'm going to try to bridge the gap between this $0 premium plan and that more expensive option, Medicare Supplement Plan G. I'm going to do so. I'm going to bridge the gap for a fraction of the price. Okay, I'm going to be able to do this for a half of or a quarter of what you would be paying for that Medicare supplement policy. I'm not putting you on a supplement. I'm helping you get closer, as close to those benefits as I can, but for a fraction of the price. So what I want to talk about here is the flexibility of these plans. And with Heartland National Life, the company that I work for and that I've been a big part of for about 4 or 5 years now, we have the ability to protect that client from anywhere from $100 to $600 a day in the hospital. If they have a $175 copay, we can protect them at $150 or $200 a day. If they have a $500 copay per day, we can protect them at $500 a day in the hospital. If they have a deductible for some reason in the hospital, maybe it's an under 65 plan, we can help that individual with a $600 a day benefit for anywhere from 3 to 10, 15, 20, or 31 days to help lower some of these exposures. But focusing in on Medicare, let's just say this client had a $295 copay for 7 days. We'll position a $300 benefit amount for 7 days here. The nice thing about this benefit is if they go in, let's say for 3 days into the hospital, and they use up 3 days worth of their benefit period, they still have a remaining 4 days left that they can use before satisfying this 60-day restoration period here in the bottom left corner of the screen. And 61 days later, you end up back in the hospital. Your daily benefit amount restores and your daily benefit period restores. You get another 7-day benefit in this scenario. Most clients don't know that their hospital copays are restoring every 60 days. So when you educate them on that, you're creating some more value for you as an educated agent, but you're also creating more value for this hospital indemnity plan. So moving on, our plan also pays on observation. In order for this top benefit to pay for an inpatient hospital stay, you have to be in there for a full 24 hours, 1 day in the hospital. However, if somebody's put in observation, even for 1 hour, we can pay 100% of that hospital indemnity benefit up top, up to 3 days per year in observation. We also have a $150 emergency room benefit built into this plan that pays 4 times a year, which people can use, to pay down their premiums, right? They can apply that extra money that they're making on those emergency room visits to their premiums. Because, Luis, what is your typical emergency room copay?
$90.
$90, maybe with Humana 120 or different companies, but we're seeing copays that are less than $150 is my point. So Mr. or Mrs. Jones, if you're subject to $90 and you get a $150 benefit, there's $60 to put in your pocket and help pay some of your premiums or even some of your other bills that you may be getting hit with. Next up is our guaranteed issue window, ages 64.5 to 65.5. Okay, Luis and I have had some conversations about this over the last couple of days. This creates such a sense of urgency for our clients. Some of these folks have COPD, or they've been diagnosed with cancer in the last couple of years. These individuals can get on a plan like this, and 6 out of our 7 riders with no health questions asked, just for being within 6 months of their 65th birthday. So if that individual has COPD, they probably need this plan even more than a healthy person would. So let's create some urgency behind this guaranteed issue period. Let's create some urgency. Maybe it's somebody else who can medically qualify for this plan. Let's let them know, hey, this plan is not usually guaranteed issue. It's only guaranteed issue for these individuals within this age bracket. Now get this while you're healthy enough to do so, or get this while you fall under this window, because if you don't, you're not guaranteed to be able to pick up coverage like this down the road. It really helps. Another way to create some urgency in the home or on the phone with your client is around their rate, their premium. This policy is issue ages 18 to 85, and the rate locks in at the issue age. So when they buy this policy at 64 and a half years old, they're paying a 64-year-old rate, and they will be paying that 64-year-old rate for the lifetime of the policy. Okay, the rates do not increase as you age. So telling that 64 and a half year old that, hey, when you really need this policy in 10, 20 years, when you're 70, 80 years old, and you're having some pretty serious health issues or ending up in the hospital, God forbid, this plan is taking care of you and you're still paying the rate you were when you were 64. Big stuff right there. So probably sold on this plan at this point, but if you need something else here, here's a discount. You live with somebody over the age of 18. I can bring your rate down by 7% because of that. Heartland National offers a 7% household discount just for living with somebody over the age of 18. Now, folks, I know a lot of you will be tuning in online on YouTube. If you live in Illinois, Ohio, or Oklahoma, those are the only 3 states where you have to have 2 people apply to get qualified for this discount. Everywhere else, all you have to do is live with somebody over 18. Okay. Men and women pay the same rates, and the rate locks in at issue age. Thankfully, this is a simplified issue application. So when you're working with your client, you, the agent, are doing all the underwriting. You are field underwriting to get this person qualified for coverage. You're asking a series of health questions 1 through 6, let's say, and you're making sure that these people haven't had COPD in the last 2 years, right? Making sure that they don't take more than 50 units of insulin or have any complications of diabetes like retinopathy or neuropathy. You're asking them these questions because if you don't, and if you start white sheeting these applications and sending them in and getting them approved, within that first year, we have what's called a contestability period, a 12-month contestability period. Most companies have a 24-month contestability period. During this time frame, the first year, Heartland National can look back at your client's medical records and see if they should have been issued the policy. If it comes up that the agent white sheeted the application, they could get in some trouble if they keep doing that, right? Policy after policy after policy. So do a good job asking those health questions in the field. Not trying to scare you, but it's also important to do that for our clients because we want to make sure that they can get paid out these benefits that they've been paying for every month. Now, if they don't, if it turns out that it's a rescindable policy, what we'll do is we'll refund the clients their premiums and we will cancel the policy. Okay. The only time you ever have to answer health questions during that guaranteed issue period up top is if we're applying for cancer coverage. Okay, there's still 2 questions looking back 5 years to see if our client's been diagnosed, treated for, taking medications for cancer, and some other conditions as well. On this policy, we have a dual application that allows you to save your second applicant their application fee, their $25 policy fee. Okay, and we have a wonderful e-application that we're going to demo either at the end of this call or on another one. Luis, I don't know if you want to get into some of the riders or if that's good on this one. We can always
let's leave it at this, and then we'll have some follow-up videos. But guys, let me tell you, the application is less than 5 minutes. Okay, you can do it over the phone, and it will send the insured a DocuSign, which a few clicks and then they can sign. Very easy to enroll. And guys, this is what it boils down to. and I'm an agent like you all. Probably the main reason why you're not offering this is one of two things. You don't know about it. Because a lot of times, like, I wish I'd be offering if I knew about it. I'm like, great. The other reason is we have agents that will run 8 to 10 appointments a day. So they're pretty busy. Guys, this is a 5-minute application. I mean, you can sell it while you're doing your explanation on the summary of benefits for your Medicare Advantage plan. And then all you got to do is, after you've closed that deal, you can just go in there and just finish the application. It is very easy to do. Okay. We'll talk a little bit, we talked about all the potential benefits for a senior. As far as the agent, guys, we're talking commissions in 3 days?
Yeah, a few days. So policy gets issued, the commissions pay, and you'll see the money hit your statement in a couple of business days.
Let's talk about renewals real quick, because we love renewals.
Yeah, so first year commissions are great, but why are we in this business? Why are we messing around with Medicare? We're here to help these clients, but we're also here for the renewals. Okay, that's why I'm still selling on the side in the evenings and on the weekends. I'm not letting those renewals go by. This policy also pays renewals. It's not going to be 20-30%, but closer to 8 or 9% renewals, and it'll drop off a little bit years 11 plus. But years 2 through 10, we're close to 10% in renewals.
Guys, that's not bad. It's not bad. And so it's something that you've got to do. And if you're sitting here, can you pull up that T chart again?
Yes.
So now we're going to do some comparisons real quick. I'm just going to show you guys. Remember, I mentioned on the left-hand side here, as soon as he pulls it up, we had almost a $5,200 premium that the insured was paying for their Part B and their Medicare supplement and PDP and drug cost. On the right-hand side, I'm going off memory here. See how? Okay, there it is. Okay, so almost $5,200 with a med sup and PDP. On the right-hand side, $2,000. Dude, doing my math, I am almost at a $3,200 savings per year. Now, if I go add if I go add a HIP plan to the MA plan, cover their hospital copays, cover their ER copay, cover a big portion of their ambulance copay, and then I go in there and I add some cancer, take care of some of that coinsurance for therapeutic radiation, we're almost at about $600 to maybe $700 a year, excuse me, in premium. Remember, we saved them $3,200. I am still way up. I just freed $2,600 for this insured to use. Guys, now you as the agent got some money to work with. Okay. Maybe they need some final expense money. Well, now you've got some money there that you freed up. Or maybe it's just extra money that these seniors need just to live a little more comfortable. So guys, don't fall into the trap. MedSup is the best no matter what. It is very, very good. But the alternative on the MA side, we just showed you the math, and then we conceptualize this concept. It's good. You just got to offer it, explain it like this to a senior. And I have a feeling most of them are going to go the right-hand side, where they're going to do an MA plan with a HIP. It's beautiful.
Sometimes as you're going through that Medicare supplement option and you start going through the prescription drug plan, that's what scares them off the most too. Right. They'll just simply tell you, okay, let's move on to option 3 or option 2. Yep. I've seen enough. That's simply unaffordable for me. And that it's becoming that way for a lot of people because of what we've seen over the last couple of years, these Part B premiums increasing, due to inflation. Thankfully, next year, we're seeing our first reduction in Part B premium, Part B deductibles that we've seen in a long time or ever. But this is becoming a very popular option over here on the right-hand side.
Yep. So guys, practice this T chart. If you're with an insured, you can do it on your tablet, on a sheet of paper, and start outlining the positives, the negatives, the premiums, and all the additional benefits that a senior could potentially be on the hook for, and let them decide which way they want to go. So with that, Brandon, I want to thank you. Guys, if you do not have a contract with Heartland National, hit me up. Down below is in the description is all my information. Hit me up. I'll give you a heck of a contract. And then you can get out there in the field and start offering Heartland National to all of your seniors. It's even a good product for your under 65 market. But I love this product when we're talking to seniors. Again, this is Luis Moreno with 360 Financial. Guys, thank you so much. And don't forget, I always forget this. I forget. You don't forget. Make sure you subscribe to our channel, guys. We're trying to grow it. Thank you. All right, guys, if you like what you saw, here's what I'd like for you to do. I've got some extra videos here for you to watch. And if you would, click here so that you can subscribe to our channel and make sure you hit the little bell icon so you can get updates like these in the future. All right, guys, if you like what you saw, here's what I'd like for you to do. I've got some extra videos here for you to watch, and if you would, click here so that you can subscribe to our channel, and make sure you hit the little bell icon so you can get updates like these in the future.